Back to the Contrarian Trader. This is Robert Desmond. It is Saturday, November the 21st, 2009. Folks, for the past several months, we've been told by the federal government that the economy is on the mend. You'll remember months ago when CNBC was touting green shoots. You remember that? They don't say green shoots anymore because it made them look like fools when they were espousing that belief that the economy was actually on the mend. And all of a sudden they realized, you know what, it's not. It's actually getting worse. So they've changed it to where we're seeing growth in the economy in certain areas. Last month they came out with GDP for the last quarter for 3.5%. Wow, that's incredible, 3.5%. But what they didn't bother telling you that the vast majority of that so-called growth was caused by cash for clunkers and the first-time home buyer exemption, which they've now extended. So the economy is not on the mend. Yet the stock market has proceeded higher, and now we've retraced 50% of, let's take a look at the monthly chart of the S&P 500. We've retraced, using the Fibonacci numbers, 50% of our total losses since the market topped out in 2007. That's a massive, massive run. Yet, last week in an interview, the President of the United States, who told us back in March, buy stocks, now is saying that if we keep on adding to the deficit, we may see a double-dip recession. And he's known all the while that the deficit was going to continue to grow, and he knew last week in that interview that the deficit is going to continue to grow. So what must we take from that interview? We must take him at his word, that, and only by his word because of his actions, not by his words, that the deficit will continue to grow because his actions indicate that, and that cause and effect. The effect of that rising deficit is going to cause us to go into a double-dip recession. It makes sense. And it's the only economic prediction that he's made so far that makes any sense whatsoever. So congratulations, Mr. Obama. 10 months in office, you finally got something right. We've been saying it here for months. And as you might be able to tell, I'm pretty fired up this week because I'm absolutely disgusted with this government. You know, I don't trade on fundamentals. And when I do, I first look at the management. Where do they come from? What have they done? Because management is critical. Now, take a look at young Timmy Geithner, who I agree with Representative Burgess last week, who said he should never have been hired. He's a tax cheat. You have poor Nicolas Cage owes $3 million. They're getting ready to throw him in jail. Whereas Timmy Geithner, who owed, $30,000, but still a tax cheat, nonetheless, he not only just had to simply pay up his taxes, he got promoted to the Treasury Secretary. Now, here's a guy who, during his testimony in front of the Joint Economic Committee last week, blamed the Bush administration for the collapse in the economy. And you know what? You're damn right. I'm not going to be so partisan here that you can't blame Bush. You're darn right you can blame Bush. You can blame that Republican Congress as well. But guess who was at the New York Fed who was supposed to be monitoring these banks and insurance companies? It was young Timmy Geithner. And he has the audacity, the arrogance, to sit in front of that camera, in front of that committee last week, and blame everybody else except for himself. And when he got called on it, all he had was that smug smile on his face. You just want to reach out and smack him. So I'm going to post both. He was chewed out by Representative Brady, and Representative Burgess. I'm going to post those on the homepage. Take a look at him, and he deserved everything he got. He walked into a buzzsaw. He asked for it. Last week, to continue on my rant about this double dip. We've been told that the economy is on the mend. Yet, we come to find out last week that 14% of all mortgages are either delinquent or in foreclosure. Think about that. We have trillions upon trillions of dollars worth of real estate mortgages in this country. 14% of that overall dollar amount, which, forgive me, I don't know off the top of my head, it's so big, is either delinquent or in foreclosure. Now, you want to tell me that the RTH should be at the levels that it is right now? I mean, think about it. It's scary. I don't have the chart up here, but let's pull it up. Let's pull it up. Here's the RTH, the retail holders. Look at this. Look at this run. Here's the run. I wish I had a trend line here. I mean, it's astonishing. These banks have taken all of our money, our tax money, to be saved. They were going out of business, and they've cut down the availability of credit by $1.7 trillion. The American consumer is dead. They're broke. They're trying to pay down their debts, even as the federal government now comes in and threatens new tax hikes. And I've been watching this all day so far. You have two key senators who could have blocked this health care vote going to the floor. They're now going to vote for the bill. So it's coming down the pike, folks. Get ready. I don't know what is going to keep this market afloat. I truly don't. Let's get back and take a look at the SPY on a monthly basis. I mentioned this last week that we are bumping up against the long-term downtrend line, the upper band of that downtrend line, and it's going to take rocket fuel by way of volume to break above this level. Now, they tried to do it last week. They were repelled. Now, you'll see that last week's volume continued on its trend of being down. So, for those of you that are watching CNBC or Fox Business News or whatever, and you see these people on telling you to buy, please remember this chart. Please remember, where were they back here telling you to buy here? That's what I want to know. Where were they then? They were saying sell. Now that it's time to sell, they're saying buy. They're saying, here, take mine because I want to get out. They know. They know it's coming. Take a look at the XLF. It looks like, you have to be fair. I can't just be overall bearish all the time and say, it's down, up volume, it's decreasing. Honestly, the down volume has been light as well. I mean, here's a trend line of volume that I've drawn here. It was very, very light last week on the financials. So it looks more so that we're entering into a consolidation phase here, more so than anything else. But what's troubling is Goldman Sachs. Take a look at the action on Goldman Sachs. I mentioned them last week, and it looks as though this stock is really about to roll over. Look at the volume here, above average, higher than what it is on the XLF. I mean, it stayed even rather than declining on the XLF. But if it breaks below this level here, say 169, 168, look out below because the rest of the financials are going to find them. This is best of breed. Also, WFC, Wells Fargo. I mentioned this weeks ago. If it breaks below 2250, that's the pricing of its secondary offering. If it breaks below 2250, look out below because you're going to see all these financials that had all those secondaries issued. You're going to have all those stockholders that bought back then saying, you know what, get me out of here because another panic is going to set in. How bad is this economy? Take a look at this. This is the yield on the 3-month T-bill. These people are shoving money into 3-month T-bills for security. They're taking a negative, adjusted for inflation, a negative yield. The last time you saw that was right before Lehman Brothers when it collapsed. You're seeing us about to hit it again. Why? What are they so afraid of? This is big money moving in here. Think about it. The U.S. dollar last week. We are still attempting to break out above this resistance level here. We are long the U.S. dollar. If it breaks out above here, look out below for the S&P 500. The VIX. This is what also puts this attempted breakdown in question here. We closed lower on Friday on the VIX. When the market closed down lower, usually the VIX should have went higher, somewhat anyway. So I question whether or not we're going to really continue this breakdown, at least in the early part of next week. It's Thanksgiving, light volume, maybe able to manipulate this market a bit. So just be careful. Here, Revlon, these are some overbought stocks we're looking to short. Okay, Revlon is one of them. This is a note I'll be putting out to my subscribers. Please, this is not time to short these yet. Don't get me wrong. If you want to join the Contrarian Trader, you'll get an alert telling you when to short these. You're going to make some big money on the downside, but you need to be patient. Wait for the alert. KMGB, I have no idea what they do. Chemicals, I guess. This is not the time to short them just yet. We're watching them. Be careful. Valero, we're long this position. We're looking to add more as it proceeds down here to this 1504 level, looking for that double bottom. So, folks, if you want to get alerted to our trades, please subscribe to the Contrarian Trader. Use your trailing stop losses, and please be careful out there. If you have any questions, please email me, bob@thecontrariantrader.com. No charge for that. I don't want to see you lose money. Have a great weekend and happy Thanksgiving to everybody. Have a great weekend, folks.